securities trades in the equity derivatives and the currency derivatives market. Its current code is ABCM and ABCY. What we are doing is we're going to be dropping that last character, and it will be ABC. In some instances, the alpha code will be changing. The clearing member, same concept applies, where the clearing member alpha code will also change. And in this case, you've got ABC clearing through one clearing member. And in this example with DEF securities, you've got same member trading through different clearing members, same alpha code. Okay. And I think we've repeated some of it, but basically, in essence, we've got the same concept where we're actually adopting a 3-character alpha code. Currently, it's between 2 to 7 alphanumeric characters. Where the clearing member is the same legal entity, we are also combining into a combined clearing member, and the clearing arrangements of its predecessor will actually be combined as well. Any redundant clearing member codes will become inactive and they won't be used post ITaC. Obviously related to client reference data, we've spoken about the member codes. The next thing is about branches. What we are doing is we are migrating the branches in its current state to our reference data system. We're linking them to the trading member role that they belong to. And it's used primarily for post-trade deal management activities. The trade, the way it's going to work, it's going to be allocated to a branch or to the main member, and the clearing, the deal management and clearing system will basically use the account code on the trade to actually do the allocation to the correct branch or to the member. Below here, what we've got is the process of linking the member client data. So what we plan to do is, and that is your members' client information. We are going to be doing the extract from Nucleus. We will be linking it to the new trading member or branch, as well as migrating the client sub-accounts. And I think another important point to note is that the code will remain unchanged and will be unique. Okay. Another change is with regard to the trader IDs. Last year we did some rule changes where we changed any reference in the derivatives rules around dealer. We called it a trader. We launched a new trader registration portal as a result of this as well. And basically, in essence, what we're doing is, oopsie, apologies, is that currently it's 4 to 7 characters long. With ITaC, we're adopting a trader ID, which is 5 numeric digits. It's similar to the equity market for some of you guys that trade in the equity market and is a trader in that market. And what we're also doing in conjunction, because of the integrated trading and clearing program, we are going to be combining numeric codes. So if a trader trades in the EDM market and the currency derivatives market, you will have one numeric code going forward. It will be a lot simpler. Currently, we've noticed we've got multiple Neutron login IDs. Sorry, yes.
Would that be the same for the equity market? So if the trader were in equity as well as EDM?
Just wait a minute, if you don't mind. So repeat the question.
Would that be the same for the equity market?
That's correct.
Okay.
Yeah.
Gotcha.
So we're trying to minimize that you've got 2 different trader IDs. We've taken that into consideration as well. Okay. Thank you. So what we're doing is we are migrating the trader information. We've got all the trader information that sits in Nucleus. We've also got it in our systems, and we're just going to make sure that we've got all the details there for us. And for that, what we're going to be doing is we're going to be liaising with the compliance officer, and I've got a timeline in the next slide where we're going to ask the compliance officer to assist in reviewing the traders and provide us with an updated list so that we can start doing start loading them into our system in preparation for ITaC. So regarding a time plan from the JC, so we've spoken about the member codes here. We will be engaging the JC team. It's primarily my colleagues from capital markets will be engaging with you to the trading members and clearing members. I know Brett will be engaging with the clearing members. What we've also looked at, if you're a clearing member, is that if you're a trading member and a clearing member, we are also looking at alpha code consolidations as well. Okay. So we're going to talk to you during April and May about the member code changes. Similarly, regarding the trader IDs, my team, which is the client data team, will be engaging with the compliance officers. We're going to give you a list of who we've got in our system for you guys to review and provide us feedback, and we're hoping to get that feedback by the end of May, because that will then take us to, this will take us to where we need sufficient time to do updates in preparation for, from an ITaC perspective, obviously the dress rehearsals and the go live. And also, obviously, we still got the business as usual. So on a daily basis, we get requests from the members. So we have to keep systems aligned as we're actually gearing up towards the go live date. Okay. That's it from me. I'm going to hand over to Martin, who's going to talk about how the client reference data changes that we are. Yes, another question.
Thanks. So is it safe to say that all the accounts, basically all the house accounts, all the branch member codes, all the client accounts, all the sub accounts will basically be migrated across into the new system with that change that you've essentially
linked to the alpha code and to the,
yeah.
Yes.
Okay.
Yeah.
Thank you.
Correct. Okay. So here we go to Martin.
Thanks, Maria. So not to bore you guys all to death with the same picture that you've been seeing in probably every slide or presentation we've done, just to bring it into context of what Maria just spoke to you about is, again, the setup on a firm level. So why are we moving to these alpha codes that are uniquely identifiable? Why are we moving markets into one another? If we look at the long-term view in a few years' time, we're going to be looking at having one firm that can handle everything else. Now, if you think of it from a maybe more from a development software provider perspective, it means you can have one firm, one comp ID, one connection, logical setup across all of the markets. It's no longer dependent on a code on a firm level, what markets you can trade and so forth, but we'll go deeper into the trader himself who can trade on a certain level. Because if we're very honest, not all firms out there are simply an equity firm or just a derivative equity firm or a currency firm. It's a mix of desks all over the place. So in the final world of where we're going with this ITaC project in a few years' time still, and yes, it will be around for a bit longer than just this go live, we will be looking at one firm trading multi-assets across markets and simple connections. Okay, so again, just to bring what Maria said home to you is you've got your firm at the top level. This is the setup. This is how it will look. And below that, you've got your trader group levels. Now, trader group levels, again, just so you understand as we go through this journey on ITaC, they are not branches. They are simply an indication for you to further kind of group trading activity, geographical regions, anything that you really come up with from a connection perspective on your firm. So you are very welcome in your new world to go live with one trader group. Trader group, we're not forcing you to have millions of them. You're not forcing you to tell us what they are there for. You're not forcing you to tell us exactly what they've been used for. All we need is it's a logical grouping of we have a firm, we have a trader group, and then everything lives underneath. Okay. You will notice that there's a comp ID trader group. The comp ID trader group is an internal group where we put all your comp IDs. It's a connection one, so you will not have to worry about that one. And that's where all of your users sit. So again, if we're thinking about the end world where you'll have one firm that connects through all the different comp IDs. On a comp ID level, you could still decide to connect to a drop copy gateway, a native gateway, an enhanced native gateway. So you've got a full-on choice there to segregate your connectivity. However, the firm as a whole will be seen to be coming through each of those comp IDs. Now, if you look at every trader group, we've depicted it here there's 3 trader groups. On each of those trader groups, you'll see the same trader. So if you look at the first one, it's 10123. That trader exists in every single trader group. We just throw them in all the trader groups, and you can start deciding what you are letting through onto your side in the system. Now, this is a bit more technical, but from a business perspective, when the messages start flowing into your front end, into your systems and hitting your firm, you can use the trader group to start filtering out where these messages should end up, go to, and so forth. So you've got a big trader group, and let's say that's a commodities market. You've decided to attach to that trader group. It comes into the system. You say, well, only these traders that I've got sitting on this desk should actually be seeing this detail, or the head trader, or the compliance officer must see everything, and you can start segregating who can actually see it by virtue of the trader group. The trader, obviously, trader ID is obviously going to be a specific person that's trading. So that's very simple actually to put into your systems to say only if information flows with that trader ID, only show to a specific person, plus obviously compliance or head trader. And further, the flow could be DMA traders, algos, they will all each get allocated a number. So very similar to the equity market at the moment. That number, again, if we look to the future finished world of ITaC, that trade ID is able to trade multi-market. You'll have one trade ID. I think that's probably a good way forward than having one trader ID or an identifier per market for the same person or system sitting on that market. Looking further below the traders that we've got in green, those are normal traders or systems and so forth. We've got a clearing member user ID and a back office user ID. Those exist and will be in the system purely for back office functionality on reporting trades, because again, remember, reporting trades or any off-book transactions happen through the Millennium front end or the trading front end systems. So we have IDs where you will be created as a back office user or a clearing member user. The clearing member user being the user that is reporting trades using the firm that a specific comp ID has specifically been allocated to. Now I think we've labored that point in detail and close to death, but just to put it into a picture again, that's how they will exist. They will all exist under each of the firms. Unfortunately, it was cut off at the bottom there, but all trade IDs, be they back office users, clearing member users, or traders, will exist under each trader group that you decide to set up, completely up to you, and that's how you'll do your segregation. Okay. I think here we move on to the view that Andre will present from a position side and clearing, and I'll not try to sound clever and tell you about those things.
Good day, everybody. I'm just here to show you guys the position account view that will happen in RTC. So as the trade comes through from MIT, it will hit RTC. As you can see there's your clearing member, there's your trading member. That's your trading member. So that will be a trading member ABC. He will have a house account, a house sub, a house suspense, and the client suspense. He can also have a branch, could be ABC branch 1, and they will also have their own position accounts as per the current system. There's that client, that TM. You can have a client, which will have a client main and a client sub, or that will be client 1 for ABC member ABC with their position account. So there's a client main and a client sub. So this is just a position account view. This is the risk and collateral view. Now, as you can see, all these position accounts are showing under TM1 house because that's the risk node. And then that TM1 branch, all his stuff is under here, and you can see that his client's got his own risk node and collateral account, and the same for that client, he's got his own risk node and client account, and also their own collateral account, because the branch can't have a collateral account. The branch belongs to the TM1. Any questions? As it's just segregation of the collateral, and then this instance is where a trading member will have two different clearing members, so two different markets. So in the first market, the equity derivatives market, he belongs to clearing member 1. So all the risk nodes and position accounts will be there. And then here, he belongs to clearing member 2, but that clearing member 2 will only see the currency derivative stuff that's allowed for this trading member and client. This clearing member will see everything for equity derivatives. And obviously separate risk nodes under the different clearing members. And this is just the example that Maria gave us earlier, where we're consolidating the codes. So old was ABCE and ABCY, now it will all be ABC, and the same here DFE and DFY. The only instance here is two different clearing members. So this is the ITaC world, so all the single stocks and the currencies will be under the one, and here it will be the two different clearing members. And this is the current, so everything is being broken up separately. And that's me. Any questions? I'll hand over to Marika.
Good day, everyone. I'm going to speak to you about the changes on an instrument level for reference data. So the first thing is that we're going to have 3 new instrument identifiers in the ITaC world. The one is the contract code, but it's going to look very different to what it looks today. Today you've got that 4-character contract code. We are introducing something different that's a lot more readable, but it's also longer. Then we're also introducing an ISIN. As you may know, the JSE is the National Numbering Agency for South Africa, and we've had quite a bit of pressure in the past to start issuing ISINs for derivatives. So now with the new systems we are able to do that. And then we're also going to have a unique numeric ID for every tradable instrument. So the new contract code, there's going to be a convention that we're going to make available to you. It's different for different instrument types, but there's a few examples that I've put up there. You can see that when you look at it, you kind of immediately know what you're looking at without having to know what a D or a Z or a W means. So we hope it's going to be a bit more user-friendly. Then for the ISINs, in the South African market, we have a standard where we use a specific letter to indicate what type of instrument it is. So like for equities, we have ZAE. So we followed the same standard for derivatives, and there you can see what it's going to look like for all the different derivative markets. So then let's talk about how are we going to give you the mappings between what you have today and how it's going to look in the future. We're going to have a field in the system called old system code, which is just going to be populated for the data that exists at go live. This is going to be made available to the market before go live as we lead up to go live. We're still going to confirm in which format or how exactly that's going to look, but we're going to give you enough time to work through that and to know how everything's going to map. So it's just important to understand that that code will just exist at go live. Any new instruments that are added thereafter will not have the 4-character code anymore. It will just be the new ITaC identifiers. There's also some changes on an instrument type level, and similarly we're going to give you that mapping between what we have today and what the new instrument types are going to be. It's going to be made available in a document that we're going to put on the website. But just to highlight some of the changes, we decided to use the real underlying names in all cases. So instead of having AllMe, we're going to call it AllZ Mini because that's what it is. And then there's quite a few instrument types that we currently classify as can-dos, but they are actually quite standard type of instrument types, and going forward they'll have their own names. They won't fall into the can-do banner anymore. Andre is quickly going to speak to you about dividend neutrals.
Okay, as you guys know, in the current system, the dividend neutral is a fictitious contract. So when you do trade the dividend neutral, the N contract, you get the equivalent of the Q contract and the F contract. And the reason for that is for the Q contract to have the stock, and the F is for the journal transaction. Now going forward, the dividend future is falling away. So we're combining both of them into one contract, which is called the dividend neutral contract. So you're actually going to trade the dividend neutral. You're not going to predict the dividend when you trade it. And on X date, the journal transaction will still run on the dividend neutral where it used to run on the dividend future. And the main reason for that is when the guys are doing their rolls so they trade the single stock future and the dividend future together. So when they roll it to the next expiry, they actually forget to roll the F contract and they just roll the Q contract. And then we sit with naked dividend futures on the system, which it could be a potential risk if a dividend gets declared. Hence the reason why we're taking away the dividend future and combining them both in the dividend neutral. Any questions?
And then I just want to mention on corporate actions, in the ITaC systems, it's going to be automated. Currently, it's done on spreadsheets with macros and that kind of thing. We've built all that automations into the new system, and there's 2 parts to it. There's the reference data updates that's going to happen in the master data system, and then the position adjustments, which will happen in RTC. Another good thing is that the same team who's managing equity corporate actions will now also be managing derivative corporate actions. So there's nothing getting lost in translation anywhere. It's the same people managing from end to end. The market notices will still remain manual for now. And then we also just wanted to make you aware that we are going to source our international corporate actions from Thomson Reuters. Thank you. Martin's going to carry on.
Thanks. So this data is also available. All of the things I've spoken about is available on our volume 00 on the website. It's a great document. Everyone, I'm sure you've read it now, finally. It's got all of this detail in already, but we are bringing it to the fore again to just make sure everyone is aware of it. You come to visit, you can ask any questions on it, but in the new world, again, as you currently can do, there are user-created instruments where you create your own instrument any days and so forth, and you trade on them. So slight change to the nuance and the naming of them and so forth, and how to do it is obviously from a pure technical perspective on how this should function. As far as we understand, or we hope, the software developers from your side, or this is the expectation you should give them from a business perspective, is that what you can do currently and how you do it must be facilitated in the new world, just on the plumbing or the back end and the messaging. Let's just facilitate that same functionality for you. Now, the functionality we are introducing or carrying over are these 4 user-created instruments. We've got any-day futures, naked options, delta options, and the new forward instrument. Okay. How you identify these, as we've explained already in volume 0, is through the trading reference data CSV files. These are the files that we keep speaking about each time that you will receive at the end of the day. After the market is shut, after all end of day processes have run, around about 10 o'clock, 10:30, you'll receive these files in preparation for the next day. You will remember on the timeline that we spoke about, that there's a clear indication of when these get sent to you. Plus in the morning, should there be any changes between, and hopefully not, we haven't seen those in the equity world actually since we've gone live a few years back. But should there be any changes, those get rerun and provided to you at 4:30 in the morning. So that is your reference data, all the meat and all the information. And once again, in that information pack, you'll receive an indicator that says if you can do a user-created instrument on a certain product. So it will indicate to you that on a very high level point of view from business perspective, can you click on that instrument and create your own any day, or can't you? And obviously some instruments you can and some you won't be able to. So that gets indicated in your reference data files, and literally it's called user creation allowed or not. So file says yes, no, and there's a couple of enums there. Futures can only be created if existing future contracts already exist for them, so that logic gets carried over. There'll be a standard future on it and certain expiries. You can create an any day in between these expiries. So you won't be able to go further than any of the instruments that are currently listed on the system. So if we have an ALSI expiry, for instance, that is next year, December, you will not be able to create anything further out than that. Should you wish to do that, it's a call, we'll load the next expiry on that, and then you've got the option to create any instrument. So that's the limitation, obviously, for all our downstream systems and valuations, and there's a whole bunch of stuff that we run off those dates, but that would be your limitation. We obviously send out any instrument that gets created intraday through the market data gateway on the trading engine. So every client that is listening live will be aware of this instrument being created literally within a couple of microseconds of its creation. There is in the document, there's a breakdown of how you identify. Obviously, the MITCH gateway, again, is not going to send you the full CSV file of all the embellished data. It will give you a simple indication of this is a symbol, this is its instrument ID, the very skinny portion of the trade, but it'll identify in enough detail what type of instrument it is that has been created. If you do wish to, then also trade on that instrument. You'll obviously not be able to, from a system perspective, create the same instrument twice. If an any day exists on a certain date with an expiry set, you cannot create the same one. The embellished data that we'll be adding to the trading files at the end of the day will appear in that process I spoke about earlier. So 10:30 in the evening, you will get all of the information needed for that instrument. We'll add the ISIN code, we'll add all of the reference data that is inherent in these CSV files to that user-created instrument, so that from the next day onward, it will really look like any other instrument that you have in your systems, except that it was created by one of your colleagues, competitors, or fellow users out there. Any questions on that process? I think it's very well documented in the volume 0 we've published. It's just bringing it out again. And I'll probably go through the other slides a little bit quicker in the meantime, but it's all there. If you have any questions, just, again, drop us a mail, phone the CSC team. So really, this is just trying to give you the meat to what we've discussed now in the previous slide. What are the steps to creating an any day future? You identify the eligible reference instrument in the expiry group field must be populated. This is all in the CSV file. So I won't go into every single step of these, but these are the steps that you would do. And if I quickly jump through each of those, you'll see the steps remain the same. It is just the indicator within each of those files from a technical perspective that changes for you to say what can be used and what cannot be used. So step one will always be identify the reference instrument, pick that, create an any day future or option or forward, those 4 options we spoke about in the beginning. There's validation performed by the JSE system, and that was what we spoke about, that it can't be on a standard instrument. Obviously, it can't already exist in the system and so forth. Simple validations. And then step 4 is we update the additional info at the end of the day. So I won't labor through each of those points. It's there for you to have a look at. It's in our volume 0 already. If there are any specific questions to this, please let me know. But otherwise we'll go through, and the delta options is the same. You'll see some of the boxes are a little bit bigger because there's a bit more information that you need to provide for a certain instrument. Any days being a lot simpler. The delta options are just if you are creating your instrument and there's no any day future available, you'd obviously create the any day first and then the option on top of it. Yeah. And that's it from a user created instrument perspective. Are there any general questions on that process, or if anything jumps out at you that you're not seeing in the current world or in the new world?
Are there any questions from people on the webinar? Let's just check. Nothing. Okay, and then just a note on what Mareka was talking about. So there is a sort of a high level guidance note that, well, we didn't call it a guidance note, we did, guidance note. Okay, on what she's explained today, there is a little document that we're going to publish that gives you a little bit more information on and more examples. That'll go up on the website probably today or first thing tomorrow morning. Okay, over to Matt.
Morning, afternoon, I don't know what it is. The following slides I'm going to present are really going to speak around the interfaces that are available into the new ITaC world, because we've had quite a few questions around where do I do this or where do I get this from. So we're just trying to again put it into perspective, and Sandra mentioned at the beginning that we have issued a hotline earlier, I think it was this morning, around the same overview that I'm about to go through in a little bit more detail and hopefully get some questions as well. So that's going to clarify around the interfaces that are available and what data and what functions are available through the different interfaces that we have. So as I said, it's an overview of all client-facing functions facilitated by ITaC. We've tried to put them into a logical grouping around trading, market data, and the post-trade solution. We also tried to put into perspective of typically what target group will be using a specific function. So be it a clearing member, a trading member, or an information subscriber. And then lastly, what is the actual interface that you're going to be using to perform the function or get the data from or subscribe to, whatever the case may be. And you've got options like the trading system, obviously the post-trade system, the IDP portal, and the JSE website. Right, this diagram, I think you've probably seen it about 20 million times, but it sort of illustrates the 3 silos that we have. And on the very left here, we've got the trading system with its gateways. In the middle, we have the IMAPI interface, and what sits behind is the post-trade system or the real-time clearing system. And on the right, the information delivery portal or IDP. I think there's another portion to it. And then supporting all of that are fee schedules, calculation models like the JSPAN model, the billing methodology. Those are supporting documents that then help you to further use the data you've got available via all these interfaces to replicate certain things that we do or do calculations or have further information on them. So that's sort of the picture that we're trying to paint. This is basically the detail of what's in this hotline, or what we published, I think earlier this morning, around giving you a little bit more context around the target audience, the type of interface, and where it originates. So let's start with trading, and Martin, please chip in whenever you need to. We firstly have reference data subscription. So obviously your trading system only provides you with real-time reference data, which is the result of a user-created instrument that Martin just spoke about, like an option or an any day or forward or so on. The actual fully embellished reference data is available on the IDP portal, which I think is the morning download. And that will be further embellished as new any days or any user-created instruments are added. The next morning or the next time the download is made available, they will be included in that download. Then the next portion on the trading side is obviously your order and trade management portion, which is quite self-explanatory. It's your on-book orders, it's your quote management, it's your off-books, and it's also cancellations. Next up is the order and trade monitoring, which is that drop copy? I assume that will be through the drop copy interface, order and trade monitoring. So that is receiving of your real-time copies of order status and trade executions directly from the trading engine. So as things happen in the trading engine, that'll be the portion, the gateway that'll push that through to you from the trading point of view. Lastly, on the trading side is market data, and we've got live market data and non-live market data. First of all, obviously, through the market data gateway is your full depth of market data. And if you choose to elect to receive that, you can also just receive your top of book, which is your best bid and offer. We also have the JSE web, which offers a delayed portion of the feed, which is available. Some of the price feeds are available on the JSE website as well. So that's another source of live market data in inverted commas. I think that differs for the different markets. Lastly is the non-live portion. So you've got your non-live data products, which are available via IDP. And then lastly, your web reports, which is a limited set of free-to-air web type reports that we publish on our website, which contain certain information. Any questions on that? I think that's pretty much the way we do things today on the equities market, and we'll be aligning that in terms of ITaC. Martin?
Yeah, maybe just to mention on your one small change is your open interest that we're currently obviously displaying on your screen as and when it changes. That'll be displayed in a different area which Matt will get into, but we are going to publish it out on your market data screen. It'll be periodic, so we will be sending that out every 30 minutes on updated instruments. So you'll get a view of, on the market data screen, you'll get a view of the open interest per instrument. However, for a real-time view, you'll go to the RTC system and interface to it, and then you'll receive it real time.
Okay, so open interest. Okay, so just to support Martin's point, obviously as trades occur in the trading system, they flow across the wall, they get thrown across the wall, and they end up in the clearing system. And as that clearing system receives trades, we obviously build positions in the derivatives market. In terms of the open interest view, we push that back for all our tradable instruments via our integration layer back to the trading system and publish them out via the market data gateway. I think it's in the full, is it the, what's the message called?
It'll be in the extended stats.
The extended stats message. And that happens every 30 minutes. However, from a position point of view, and that's private data, you will be receiving those in real time on your IMAPI interface if you subscribe to that data. That's in real time. However, the open interest portion, which is the market view of a tradable instrument, is only available via the market data gateway and not published on IMAPI. At the frequency, as you said, every 30 minutes. 30.
13 is a bit of an odd number. Really.
Yeah. Right. Now we move on to the post-trade site, which is the middle interface that we had on the fancy drawing. And again, we've got the reference data portion of it, which is a subscription-based or a snapshot-based service. So here we have the post-trade reference data, which is all reference data linked to instruments, currencies, volatility surfaces, curves, and any other risk parameters and collateral parameters that you may need. So that's reference data, which you can request and download and request a snapshot of from the clearing system via IMAPI. An alternative channel, and this is quite important as we've been asked for it, if you don't want to interface to IMAPI, you will be able to also receive that data or retrieve it from the information delivery portal, which will then save you the interface to IMAPI. But obviously keep in mind that there is a live portion to the reference data updates as well. So as things get added, they get pushed out based on your subscription as well. IDP is your more static version of that reference data, published once or twice a day. We just need to check how often that's published. Right, then the post-trade market data, which is really your intraday updates to specific static reference data you've downloaded. So for example, we'll be publishing prices, intraday updates of prices on eMappy. So you'll be subscribing to the market data feed, which we also call the market data feed on eMappy, and you'll be receiving latest prices on instruments as our pricing engine calculates those. We'll be pushing them out. Those are the same prices that are being used for us to calculate intraday risk. So as the price of a specific underlying changes, we're updating risk on our side, and we're also pushing that underlying price that we use for that calculation out on that market data interface on eMappy. And as you see, there's a couple of other components around rates, which we push out, volatility surfaces, curves. Again, if you subscribe to that specific flow on eMappy, you'll be receiving those updates as well as they change. And lastly, we are also offering some of this reference data, if I may call it that, at end of day for risk calculations and other purposes on IDP. And yes, we will be including stress prices here. So again, this is another way for some of the providers to potentially go to this interface and retrieve this data if they don't want to interface to eMappy. Right, private reference data. This is your specific reference data for your entity that you're subscribing for, and that includes your specific information on clearing or member entities like clearing members, and branches. Also your member clients, which contains all the attributes of a member client, and your accounts, which we spoke about earlier. Reference data management, so any admin you might do on your specific reference data entities, like you're changing the phone number on a client, we'll push that out to you again as you've done the update. Anybody who's privileged to see that information will receive that information. For example, if a trading member loads a client, the clearing member who's subscribing to that flow and obviously privileged to see that member's information will get that client pushed down as a reference data update based on their subscription as well. The next category in post-trade, again eMappy, is deal management. So here you've got all your specific deal management functions that we're offering on the post-trade system. So we have, obviously, first of all, we'll be receiving the trades from the trading engine, from MIT, and publishing those out on the respective flows as they happen. If you do any deal management thereafter on those specific trades, you will have the following functions available. You can allocate, you can correct an allocation if you've done it wrong, correct the principal, you can do your assigns, you can accumulate your trades. So all these functions are available on eMappy. So the deal management functions. So once something is matched, it travels to the clearing system. Now it's available for deal management purposes. That's the logic to think about of what's available in clearing versus what's available on the trading side. And we'll get to the give-ups now because there was some question on the give-ups. We've got a slide on that just to clarify that. Similarly, if you want to assign a trade, there's a mechanism in eMappy that you assign a trade that's matched previously in the trading engine to another trading member. That other trading member can reject or accept it. Similarly with a tripartite, the destination party can reject or accept it. So that's the deal management. So think of it as everything that happens in trading that's matched, it now sits in clearing. That's where your deal management takes place through eMappy. Any questions on that? Just get the microphone. Sorry.
Yeah, I just wanted to ask that if the reference data, there is a link, I guess, between the reference data on the trading interface and the and these interfaces, right?
Yes, we're using the same, what Mareka went through. We're using the same as the contract code that aligns across both.
So they're all listed then, or?
Yes, and we've got the universal ID, which is the JSE assigned ID, which when we load an instrument in our master data system, that universal ID is common across all JSE systems. So that should be your link between the two. I think the pretty name that we've got, that you just explained now, also is the same. You don't have that display. So it'll be in your embellished reference data, I assume.
Yes.
but it won't be on the API side of things. You have to use universal ID to link the two.
Right.
Okay. Right, some more functions on post-trade, on eMAPI. First of all, position management. So similar in the vein of deal management, we've got position management. As we receive trades and as deal management happens, position updates obviously get processed in the clearing system and pushed out, and positions change and move. But you also got a couple of options to modify a position sub-account. If a position specifically after T is sitting on the wrong account, you can adjust that position sub-account as a position sub-account modification. Your option exercises and abandons are also actioned through the eMAPI interface. So that's where you'll be exercising and abandoning any option positions you may have as the long position holder. Commissions. So you're familiar with the commissions methodology that we're implementing with ITaC. We have explained that in previous sessions, but basically any commissions you want to submit against another party that you want to collect, other than taking a turn, which was the methodology used before, you do that in the clearing system. So you've got some other methods there where you can capture the commission, and the commission will then be collected via the clearing member mechanism at end of day through the net settlement. However, you can also reject a commission. So someone alleges a commission against you, the counterparty can reject the commission. They don't have to accept it. So that methodology of commissions also sits in the eMAPI post-trade interface. Intraday risk monitoring. So here we've got obviously the eMAPI interface again, where we're pushing out indicative initial margin calculations, indicative variation margin calculations based on change in positions and change in prices, which we're also publishing. So that's all part of intraday risk monitoring. You will also be able to set some thresholds in the eMAPI documentation, where you can set specific thresholds around risk on your clients if you're a TM, or a little bit higher up if you're a CM, you can go down the cascade and you can set it on your TM level as well. There's also alerts. If you look at the risk note event message, there's a specific alert in there. If that specific threshold that you've set gets breached, then you will receive a specific alert through the eMAPI interface. Any questions on this? Then lastly, collateral. So the collateral functionality, again, is exposed and used and managed through the eMAPI post-trade interface, which is the middle of the drawing that we saw at the beginning. So here, trading members and clients can be set by their clearing member, and for trading members for their clients in terms of a minimum cash percentage. You can manage that. If you don't want to accept a certain amount of collateral, you want to limit it to a specific amount of cash, you can set that percentage here. You can receive and confirm, reject security collateral withdrawal requests intraday. That's on the intraday rebalancing. So that's our rebalancing that happens after the end of the day, the next day. So we have a run at around 11 or so o'clock, where we look at specific incidents where people may want to withdraw specific securities and post more cash, or the other way around. So we've got specific functionality sitting in the collateral management space, which is all managed through the clearing interface. Similar to Forex, so it's not just securities, also Forex is managed through the post-trade system interface through eMAPI. So here you will receive your specific haircut values, you will receive your eligibility criteria in terms of what currencies are accepted, similar to the securities. So reference data around, do we accept USD, do we accept pounds, and what securities, i.e. what shares qualify for collateral as well, are also exposed through the eMAPI interface. And then lastly, the confirmation of foreign currency collateral postings per client to the clearinghouse. This is done by the authorized dealer, so this is a clearing member function, and they do that through the eMAPI interface at end of day, and they then confirm that they've received specific Forex in lieu of initial margin that's being called for, and it's been part of our end of day. We then take that confirmation and then we confirm that you've got this much ZAR cash to pay because you've received the rest in Forex collateral. So that's the whole collateral management interface, which is also through eMAPI, as I've mentioned, or post-trade. Right, we're nearly there. Clearing member balancing functions. So our entire end of day process runs on the real-time clearing system or on the post-trade system. So the end of day process is exposed via IMAPI once again. There is some interaction between us and the clearing members in that process. But again, as a result of the end of day running, there's also certain messages and events that go out. So if we are running our end of day, you will receive, as a result of option exercises that the system may do for you because it's closeout, you will receive that information on specific event flows. So that's all coming on through on the IMAPI interface. Clearing members specifically confirm their balancing state to our calls that we're doing, that we're sending out via IMAPI as well, at 2 points in the end of day process. So we've got the clearing member 1 balancing process and the clearing member 2 balancing process. And at both processes, clearing members can elect to say we've agreed, and if we don't receive that acknowledgement, we don't move on with our process until we've sorted out what the discrepancy may be. So that's the clearing member balancing functions that sit on the IMAPI interface. Then lastly, you will, or settlement, or the daily net settlement amounts for ZAR and FX cash are posted via the IMAPI interface, obviously to clearing members. I do believe the balances also reflect at the member level on the IMAPI interface. Then SWIFT is a different portion. So obviously the execution of the actual cash settlement of the net value at the end of the day from a ZAR cash point of view then travels via the SWIFT system, and we then await the confirmation from SWIFT before we zero out those settlement instructions and return them back to zero. Similarly as we do today, but today we assume things have been paid. You do check it. Okay, but I think we do it the next day, the next morning. Yeah. Same day. Do you want? Okay. And then lastly, the physical delivery report. That's still email. Shame, the last box was left to the technologically challenged. Right, so physical delivery report will still go out via email. So based on that, you will then have to obviously book any physical deliveries in the underlying market to affect the delivery. Right, any questions on this? I know it's a lot of stuff and there's a lot of detail in this. I suggest that there's specific areas which you're not sure about, let us know and maybe we can do a specific session on them because there's a lot in here.
You said there was a, thank you, can I just mention you said there was a hotline that went out this morning. It was actually on the 15th of March.
Oh,
and the document is sitting on the ITaC page on the JSE website.
Okay, great stuff. Thank you. Thanks, Trudy. Right, I spoke about off-book trading versus deal management a lot, I guess, in the context, but there's a specific topic which is around give-up trades that came up in previous sessions, and it's very important that we clarify how give-ups are handled and what interface is used for a give-up. So it's very important to say that when you're trading in a principal capacity, i.e. when you're going on risk, the give-up is generated by capturing an off-book trade on the trading system. Does that make sense? Okay. However, when you're acting as an agency or in an agency capacity, the give-up is generated through deal management using the assign or tripartite function. So that's when you're acting as an agent. That's you've got the trade at a specific agreed price, you put the order up on the trading engine, it goes through to the clearing system. You now want to assign it. You do that in the post-trade system via IMAPI as part of your deal management functionality that we've exposed. However, there's an exception, like there always is in life. Okay, so obviously we've got T and T plus 1. So if you want to effect a change to what you've done on T plus 1, the deal is no longer available, obviously. So then you would have to go into the trading system to generate the give up by booking an off screen again. Because obviously the trade's no longer sitting in RTC or in the clearing system, which means you have to book it in the trading engine to effect that move of the position. But that's the only exception. That makes sense? Here comes Andre.
Now, just to give you some context, some of the clearing members do execute trades on behalf of their foreign clients, and the market will close, and there wasn't enough time to execute all those trades. So the following day, then they will go and book an off-book trade just to get the positions correct, because now the client that they're acting on behalf of is sitting with initial variation margin because it became a position in their book, which is not theirs. It should be executed to the client. And then they will do an off-book trade the following day, just to give you some context.
Thanks, Andre. Right, does this make sense? Okay. Right, then deal management. Lastly, just the actions allowed on deal management, depending on your capacity again. So any principal deal that's sitting in with a state or a flag of principal in RTC or in the trading in the clearing engine, you can accumulate. You can do a sub-account modification. You can do a position sub-account modification. You can do a principal correction. You can allocate only on an exception basis. So allocating, i.e. to a client account from which would be possibly a sub-account or a house account, is not typically done. It should be in your client suspense account in the first place. So in this case, it is an exception basis only, where this thing ended up under the member itself in one of the position accounts. Only on an exception basis can you do this allocation, and I think surveillance does check this.
Yeah, it's mostly for your house suspense account.
Okay.
So when there's any errors on the trading engine, the deal will go live in your house suspense account, and from there on you can allocate to the correct account.
Yeah. So if you specified the wrong client account, we automatically then, because we can't find that client account when the deal arrives in the clearing system, we put it onto the house suspense account, and then that would be one reason why there would be an exception of allocating it from there. And then obviously also the allocation error correction. Agency, if the deal is already sitting on the client suspense account, which is a house account, you can accumulate it there, you can allocate it, you can assign, you can tripartite it, you can do deal sub-account modification, and you can do post sub-account modification as well. If the deal is already on the client account, it's been received on the client account from the trading engine, or it's been allocated there, you can only do accumulate an allocation correction because you put it on the wrong client, or a principal correction. And there's a little explanation. It deals one side of a trade, either the buy or the sell side. Great. Okay. And that covers my slides. Any specific questions or topics you would like us to cover maybe going forward, coming out of this? Please let us know. Right. Thanks. Sandra, do you want to close out, or is anything specific you want to mention? No.
No, thank you. As I say, those documents will be up. In fact, they are already there. The hotline's going out. The booking fee replication.
Okay, we should maybe just mention that.
Yeah.
We are publishing, is it today or has it just been published? I saw the mails this morning. There is a booking fee replication document going out, which is obviously aimed at understanding the methodology we apply and how we calculate our booking fees, how we use the deal structure and the linking of specific trades when you've done deal management. The next document explains how you replicate the booking fee calculation we do at the JSE every night. So if clearing members or anybody else wants to replicate our booking fees, that's the document you need to use and apply to the data you get through EMAPI and other sources. So it's going out today.
And the instrument reference data, quick reference guide that Mareka put together is also going up there right now. So the hotline will go out, just clarifying that. One of the questions that we got on the webinar was, what is the timeline for us to make the mapping of the instrument reference files available? Not yet confirmed. As soon as we sort of agree it internally, I'll let you all know. We'll obviously try and publish it as early as we can. Maybe we can look to give a sample mapping and then give the full file later, but I'll chat to Mareka and we'll get back to you around when it will actually be available. You know, she'll probably be giving several updates between now and go live. The confirmation was, obviously we would give you a file and then have to give you the final files just the last days prior to go live, depending on how many new instruments come along. But let us clarify the detail and we'll get back to you on that. Other than that, thank you everybody for attending. If I can ask the webinar clients and those that attended on site just to complete the evaluation form for us, that will be great. Just give us some feedback on how you felt the session went and what you think we still need to cover. Thank you.